What's up, everybody? Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to a Saturday edition here of the Alpha Series on BitLab Academy. We got a great guest in line today, Mr. Christopher Inks, who's going to be breaking down these markets with his couple decade plus worth of experience understanding price action as well as psychology. So you aren't here to hear me talk today. So we're going to throw it right into Christopher Inks. Again, my name is Kellam, though. And if you haven't yet, before we get started, hit that like button. Hit that subscribe button, ding the bell, let us know that you are here, and we will kick this off and get it going. So, Mr. Christopher Inks, how you doing? Thank you for being here with us.
Hey, man, I'm doing all right. How about yourself, man? You ready for some movement into the end of this year?
You know, everybody's wanting the price to go up, 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 and away. And while I think there's some huge fractals out there looking at historical data that suggests we are about to pop at any moment. I think we were talking about this prior to the stream, prior to us hopping on here. Anybody can find charts to support a bias you have. So am I ready for some action through the end of this year? Yes. We've been consolidating long enough. If you had a bias right now, which direction do you want it to go? Which direction do you feel like is most likely between now and the end of the year?
Well, obviously up is a good direction. I like up, but what is it going to do? I mean, I think end of the day, we go up. Could it dip down a little bit below this like 7-month, 6-month range? Yeah, we could probably see a little dip below there. But, I think right now, traders, it's just important to just kind of watch how we deal with this range. I think it's the biggest thing. Again, we've been going sideways for 6-7 months now. There's a lot of, when you're going sideways, there's a lot of market interest, which means if you're coming up from below, you're going to get a lot of selling. If you're coming down from above, you're going to get a lot of buying. And until we actually clear the range, I mean, it's going to be a work in either direction. But, I think ultimately we're up higher. I think the bottom's in. I don't think at this point right now, I don't believe that we retest, 16 or 20,000, 19,000, anything like that, even if we do dip down a bit.
Yeah, no, I mean, I agree with that. I pointed out on the BitLab stream a couple of weeks ago, it's hard to fathom that a range isn't $100 trading range, right? A range can be, as we've seen since about March. I think I measured it out. It was like between a $6,000 and $7,000 range that we've been. Now, when we zoom out even further, you see it's that roundingness. But just looking at that period from March until now, it's been just oscillating between those two zones. Do you think that the larger market, zooming out a little bit, because everybody always tells us to zoom out. In fact, I tell people to zoom out also. Does zooming out in that context of that roundingness coming out of the January pump at the beginning of the year, push up, sell off, and then, we're getting subsequent smaller bullish impulses, which, basically form that rounding nature. Does that give you any sort of pause on the sideways range we have? Do we have more of a bearish breakdown bias? Even if it's just for a short period of time, or can we expect potentially even just to range into the halving?
Oh man, ranging into halving, I think would kill everybody. Bears
Max
and bulls
Payne?
like it. If you want to destroy people, that's what you do, right? For right now, we had bearish market structure coming off that 31, 32,000 down into the 25,000, 24 and some change there. We broke above that. Just here recently. We've pulled back since then. So, I mean, when I look at this, I say, okay, well, we've got the range. We do have a bit of a rounding on that top there. But we did break out above that bearish market structure. So had we not done that, I think I'd be much more concerned about a dip below the range low. Right now, even locally, we got rejected at the daily R1 pivot. And right now, we're testing the daily pivot, and it's that off that bearish market structure coming down, it's that descending channel resistance as well. So, I mean, if you told me to tell you right now, I would say, okay, well, I want to see what happens right here. Do we get a bounce? If we get a bounce right here, odds are we probably break out higher, and then things really start looking likely that the low is in, and we're going to break out higher. If we don't hold support here at this, like right where we're at right now, it's like 26,600, something like that. That daily pivot, if we're not holding that, if we're breaking down impulsively through that, I think that increases the odds quite a bit that we probably dip down below this, this 6 months range low here. and print a spring. And so we just kind of break on down a bit, and then we're back up in the range either way. So, I mean, that's kind of my thesis, what I'm looking at right now.
Yeah, I hear you, and I think we're at that part of the market right now that probably frustrates the most people, because people have told, especially if they're new in the market, in Bitcoin market and crypto, expressively, even more excessively the further down you go on the market cap. But people get in thinking they're going to make money. They learned of somebody that made money last cycle or the cycle before. So people are always chasing that bull market parabola. But what would you say, Chris? What would you say to people that are in the market that are frustrated that things aren't going up right now? We have the halving coming. People keep telling them the market is going to eventually go up. How does one navigate that? Because we're looking at price action to forecast the future. Price action is a relative way to understand the market psychology of everybody else. How do we understand the market psychology of this so that we can be prepared when it does happen?
Yeah, I think that's one of the best questions right now, especially, if you're a novice trader. And, that's not just people that just started yesterday or last month. That includes people that maybe have been trading 3 or 4 years and haven't figured out how to become consistently profitable yet. Unfortunately, a lot of people take a lot of offense when you say that, but no offenses, man. It's just like, listen, I think some of the biggest things, it's the mindset, right? So the first thing is, you have to understand that most likely when you came in the market, you came in with a lot of misunderstandings, a lot of things that aren't true about the way the market works. We all come in that way. We all did. I did when I first started almost 30 years ago, right? I see the same things with new people happening all the time. And we come in, and like you said, they come in because I heard somebody did great, and the price moves fast, and in their head, they're turning $100 account into $1 million in a month or something, or overnight, it doesn't happen either, guys. And most people who do something, even $1,000 into $100,000 in the course of a month or two, even something like that, most of those people end up giving it back because it's not sustainable. They basically got lucky going in. It's this casino effect.
And
then they start believing.
I hate to interrupt you there, but also I probably know more people that at some point in their short crypto career, short crypto participation, were millionaires on basically by numbers, but never took profits. They never realized the asset's value when they had the opportunity to. So a lot of people then end up kamikaze trading and trying to get back there, when in reality, the fact that they got there in the first place probably was a lucky shot. And not to say that crypto is luck, but if you're going to invest near, well-considered, fundamentally analyzed and technically analyzed entries, then you got to have a long-term vision and sit through it. If you are trading, then you need to have a strategy. Otherwise, you will give it to somebody like Christopher Inks or like me or like Crypto, I almost said Christoface or CryptoFace. People that are sitting there with strategy, they're counting on people making those bad decisions.
Man, perfectly put, man. Honestly, people come in again. They come in and they don't really know what they're doing. But hey, it's like politics and religion, right? Everybody thinks they know everything about it, right? Because they're allowed to say something about it. The markets are no different. People think, okay, well, I can put money in it and I can trade, so I know what I'm doing. But they also, intuitively, they understand that, hey, if they were to go try and play for the Patriots, play some football or something, or baseball for the Braves or something, right? They'd have to get a coach, and they'd have to spend all this money on coaching, and so they could learn, right? And I think that's a big issue. Unfortunately, a lot of new people coming with trading. Very few people actually make it on their own, and they don't make it on their own because they don't understand that they came in with the wrong idea when they first came in. They didn't understand how markets really work. Like you said, they get on paper, right? And the hard thing about being humans is that we have all this emotion. That's what makes us human. But in the markets, the problem is you got $1 million. You ran this thing up to $1 million. You're not taking profit because you're scared that if it goes up further, you're going to miss out, rather than recognizing what you've already done. And so, it's a lot of this. People come out here and they want somebody to show them how to trade all the time. How do you do LA Wave? How do you do Wyckoff? How do you do ICT? How do you do whatever? Oh, what's your special system that you use? But the biggest thing they need to figure out is the mindset. You have to get that figured out, because if you don't, you're going to get caught. You're going to get caught. It doesn't matter how well you can do a particular type of trading, right? You're still going to get caught. And so that brings in then the other part, which is, again, when they come in, everything's about the single trade. Every trade is its own. But we know that in life, in business, in life, whatever, Systems are what get us where we want to go. And it's no different in trading. So, people get then very emotional when they make a win or when they make a loss. And that emotion again is going to affect them. Even if it's a win and they have a lot of elation, that's a negative emotion when it comes to trading, because it's going to get you out of the technical side of it and into the emotional side of it, where people tend to make decisions. And again, when you're in the market, you can't make them emotionally. So there's a lot of psychology going there, a lot of stuff that people fight against themselves with. I always say that trading is simple. It's simple, right? But price is basically moving between pockets of liquidity, between supply and demand, right? But it's not easy. And it's not easy precisely because of your own emotion, your own psychology that you have to deal with. That's what makes it infinitely difficult to trade.
So,
But it's
so
the
what
one
you're
thing,
saying
again, that most
is,
people.
so what you're saying is every single person everybody, it doesn't matter if it's Paul Tudor Jones, doesn't matter if it's Michael Saylor, doesn't matter if it's you, me, DZ, Tom Crown, every single buddy that participates in this market, we have one unique thing in common, and that is we're human and we have emotionality running through us. So, and there can be an argument to be made that the best edge anybody can have in trading is, as you just said, to know yourself and understand what triggers you, and also whether it's triggering fear or greed. And as you said, being able to separate yourself from those emotions. And we cannot do that without a system. Systems are what help, much like, when kids bowl for the first time, they put the bumpers on the side. Yep. We need bumpers, especially the more inexperienced your trader is, the more bumpers you need. That's why, I just did a video on Discover Crypto about catching breakout trades. And some people would say, for instance, if the price action is going up to resistance and it breaks through, that's the trade. Well, that's not the trade because there's no confirmation there. Now you could take the trade. A professional trader may take the trade with very tight stops and different hedges and all. But for a beginner trader, you want it to break out. You want it to come back, retest, flip resistance to support. And then that's still not the trade for a beginner trader. The trade for a beginner trader is to break out, then pass that previous breakout high. That's 100%. The confirmation. And then after you master those basics, stepping it down more and more aggressive until you find that thread. So it's the emotionality. Managing emotionality is the edge. What a gem that is, Chris.
Yeah, man. I mean, it's so perfect. Yeah, man. You're nailing it here, man. Because again, like you said, the newer you are, the more the bumpers you have. So the more rules you need, and then you have to stick by those rules. We get into trouble. Your rules are what give you your system, right? Your system says, listen, here are the rules. If you're, for instance, trading Elliott wave, which is just a general system, right? Wave 2 can't break down below wave 1. That's a rule, right? And so that if you think you have a 1 and you think it through is printing, if it breaks down below wave 1, it is definitely not a 1-2 that you got there. But your explanation of breakout trades, that's exactly it. The newer you are, the more you want to wait for the retest and then the breakout further, because it's just more confirmation. Yes, you're probably going to make less profit, but you're also less likely to get knocked out of the trade. And unfortunately, new traders come in a lot and they think about, again, it's that whole idea of, well, what am I missing versus what am I protecting, or what do I get? And it's the wrong way to think. Again, especially the newer you are. We're in the game. Ned Davis said it best. He said something, let me see if I can paraphrase this real quick. But basically he said, we're in the game of losing, right? And he who loses the best, the least there, is the one who ends up winning. And what he's saying is most people come into trading and they look for profits, right? They think every trade they're looking to make money. Whereas the important thing that's going to keep you in the game is minimizing your losses correctly and to the greatest degree possible. It's not just minimizing them, but it's doing it correctly, right? But again, when I came in, I'm sure when you came in, when everybody comes in, they're always thinking profits, right? We're always thinking, man, I got to milk out every last cent of the profit, rather than recognizing, we can get 10 in a row and then get one bad trade.
And you always got to trade. You think you always need to take the trade. I mean, I can't tell you how many trades I probably took 1,000 trades that I did not need to trade, and not all of them were bad, but my hit rate definitely went down because I was trying to make something happen versus letting patience do the work for me and letting the trade show up to you. And that means sometimes waiting an hour. That means sometimes waiting a week. That means sometimes waiting a month, depending on your strategy.
Yeah, we're not, as human beings, we're just innately not good with patience. And I think it's gotten worse. You know, I'm going to be 50 here in just in a couple of years.
Damn, you look good.
So I was around way before the internet and everything. And so I've seen this as we grow here with the internet, and we see the way that people are on there, and they're, you know, you hear about it all the time, kids' attention levels. You know, when you try to advertise or try to market on YouTube or TikTok or something like that, again, you know, you've got like 3 seconds basically to get it across. And the longer you go from that, the less interest there is. And so people just generally aren't patient. They don't have a lot of connection. And, you know, when you're in trading, man, that sucks. That sucks because you're going to take out those trades. You're going to take a trade just because there's a chance rather than waiting for a higher confidence trade, something that has 2, 3, 4 different areas of things happening that are, you know, in that confluence area that are suggesting you're probably more right than you're wrong. And the problem is sometimes you'll be right if you take the trade just because there's a chance, but a lot of times you're going to be wrong. And that's a lot of money you have to make up before you can even, you know, extend further on it. Even with good risk management, it's still money you have to make back up. So
it's almost worse. It's almost worse to win that first trade or two trading in that method, because you know, there's a lot of people out there, especially in crypto with the volatility, depending on what part of the market they get in. But in like, when we start getting into the throes of the bull market and altcoins start running and Bitcoin starts running and people, you know, they heard about leverage trading. So they make their first leverage trade on 45X, and it just so happens they catch something and they make, you know, 400% or 1,000% or something ridiculous. Then it's like, oh, I'm a trader. I'm a trader. And now the crazy thing is, now you don't have a strategy, you have confidence. Those are two very bad things. And you have more money to lose. It hurts, even though you just got that out of thin air, quote unquote, because you kind of luckily won that trade. It hurts just the same if you went from 10,000 to 50,000 and that 40,000 was an accidental trade that you really had no right winning because your strategy didn't do it. Then when you lose that $40,000 or $50,000 back, it feels like that was the $50,000 you had all the time. In fact, it feels worse.
Yep. Yeah, it's a gut shot. It's tough. You know, recency bias, whether it's in terms of you know, you're winning, you know, maybe you got a couple of good trades and you got a couple of wins in a row. Recency bias in terms of you know, the charts. You know, at the top, everybody couldn't believe that it was turning down, you know, and it took a while coming down before people started buying into it. You know, at the November bottom last year, almost a year ago, you know, everybody arguing that it had to go down lower, and we rallied, you know, 100%. You know, and it's tough. Again, you know, human beings, man, the toughest thing, everybody comes in talking about worried, you know, they're worried about, oh, Wall Street's going to steal my money, or some crypto whale is going to manipulate me into taking my money. And what they're failing to understand is it's not them, it's you. You're not fighting against them. You're fighting against yourself and what's going on in your head. That's your biggest enemy out there. That is the only thing that you're fighting against out there. If you can get that under control, the rest of it kind of falls in. But if it was easy, everybody'd be doing it, right?
No, I mean, I could not agree more with you. And before we go on, I just want to just let's shout out really quick right over here. Make sure you're heading over to give Chris a follow here at TX West Capital on his Twitter page, or on, I'm trying to cross over and actually call it the X page, but come and give him a follow here. He's got other links here as well. And you can give me a follow here as well at Kelly Kellam. And then of course, make sure you head over to the BitLab Academy page and give us a follow there. And if you haven't yet, what are you doing? It's time for you. Hit that like button, hit that subscribe button, ding the bell, and diving back in with Chris here. I got to ask you, we're in a very, what I consider probably the most important part of not only the market cycle, but probably the most important part of the market cycle in the history of ever for Bitcoin right now. This is my thesis, and I'll tell you why. Risk adjusted where we're at in terms of the risk that you're taking on, because this is not some new asset that maybe it'll do something, maybe it won't. We have institutions on the horizon. We have the corporations that can now participate and have Bitcoin on their balance sheets with the new FASB rules and the fair value accounting. We have high net worth individuals starting to take a look at this as well. We have the ETFs, right? Everything is so positioned in such a perfect storm. Inflation still, not really managed in control. Bitcoin is still the best opportunity. We're seeing BRICS nations back out. And we're coming up to that halving date in April, sometime April 2024. So I think this is the most important part of the market cycle ever right now. Chris, what should people be doing, whether they're new in the space or they've been around for a while? How do we get best positioned to take advantage of this next bull market cycle while not only being risk averse, and Bitcoin is still risk on, but risk averse within the crypto ecosystem? How do we manage having Bitcoin, maybe Ethereum, and maybe some select altcoins? What's the best way to do this?
Yeah. I mean, you said it right there, don't screw it up, right? Because here's the thing. If this thing, we get the breakout here above that 32,000 area, I think it's a quick, short trip up to 40. And that just basically begets further movement. And so I think for most people, they should have, I think, especially if you're a trader, I think you should have an investment bag. I think you should have a bag of things that you buy near bottoms, near important areas, that you just don't touch. Because, especially if you're newer and you're not a consistently profitable trader, you're going to blow through your trading money, but you want to make sure that you have something sitting there that goes up in value as it continues to go up, right? So even me, I've been doing this a long time. I still, I have an investment bag. I've got a trading bag. And so like when you look down around the November low there, or even the June low, the first drop we had there before the final pop down, you just start buying. You got to understand that bottoms are ranges and tops are ranges. They're not the absolute highest and lowest prices. Those are just events. And so, when you look at the Bitcoin chart, you look from June of last year, and across there, and on my chart, I've got the whole kind of thing shown there. But this is what is that? That's I can't even know what that is. February there. I mean, that's a good 10 months or something of accumulation going on there. It's not the little part down there, November to December. That's part of the larger accumulation. So I think when you start looking at the chart and understanding that you're most likely, rarely ever, if ever, going to get the highest or the lowest price, and you start understanding, okay, well, I just have to start paying attention to when things have moved in a direction for a while, and then they're going sideways, and and things are starting to pick up. So when you can do that again, you buy in some there. You buy some Ethereum. I think its low was in June. You buy some Bitcoin. You stick. I'm a big proponent of sticking with more liquidity. I've been through multiple cycles with Bitcoin now, starting in January of 2017. And, I've seen the ICO stuff, and we saw other things come through, and, people get really bent up. Everybody jumps on and thinks it's going to be all great. And then it goes to nothing. Right. And you lose it. So I think, if you want to be an intelligent investor, if you want to make the money over the long term with crypto, you focus on Bitcoin, you focus on Ethereum. You buy some when we're down here toward the bottoms, toward the lows here, right? And you don't touch it. If you're going to get into something else, just understand that most of your alt stuff has maybe a cycle. Other than that, very few of it actually continues up multiple cycles, right? Because again, this is all still very much just just speculation, right? There's a lot of people want to look at fundamentals and stuff, but at the end of the day, for the most part, most of this stuff is just pure speculation with their prices on. And they're not going to do much of anything, if anything. Now you can grab a little something, if you want to for a little bit longer, but don't plan to hold it more than a cycle. I think you really just kind of focus on Bitcoin and Ethereum, and just kind of add to that, in that particular bag you got there. If you believe in it. Now, you got to understand that you can't just put money in there. And I know you're a big proponent of this. You can't just put money in there and think, oh my gosh, it's definitely going to go up, right? Anything can happen. We think it's going to go up. We want it to go up, but it could get tanked. It could drop, right? Every country in the world could all of a sudden turn around and say, nope, we're banning it. And I don't care how much of a Bitcoin maxi you are. The result is going to be that you're going to kill off that liquidity coming into it, and price is not going to rise without that. So, you have to really put in money that you think that you can lose, you know?
That's a great point, especially with altcoins, because Bitcoin is still subject to this because things aren't crystal clear and laid out in every country around the world about Bitcoin being any sort of like fully established international monetary asset, right? It has been held up that way so far. But when we go further down the list to altcoins, the interesting thing I find about altcoins, which gives me, it's not such hesitation that I don't trade them, because I do. And I do have some that I'm looking at for some long-term stuff. Like you said, a position trade into the next cycle, profit taking after previous all-time highs, etc. But they're all so incredibly subject to the events that happen, not only to them, but to things that happen in similar sort of, basically just adjacent to them. So if something happens to XRP, it's also going to affect other altcoins and smart contract things and quant and stuff like that. Something happens to a gaming thing, like a gaming regulations in some regard, it's going to happen to the whole sector, or at least the fear speculation does. So that's a really good point.
Yeah, you know, and again, I think pretty much all the issues that that everybody has coming into trading, and it's I think it's even made a lot worse with crypto because of the speed in which price moves in crypto. But I think a lot of it again comes from the whole psychology of it all. You know, if you're coming in where price is the only factor, you know, and for us, a lot of people are like, oh yeah, I want to make money, I want to make money. But be honest with yourself. What do you want to make money for? Money is just a tool, right? What is it that money that you see that money is going to do for you? Is it going to get you out of the job that you hate? Is it going to get you into a nicer house? Is it going to get bills paid? Is it going to make it so you can travel the world? You know, I think you have to have a good understanding of that to help you kind of fight a lot of the psychology you got going on, a lot of this emotion you got going on. But yeah, you know, people come in and they come in with the exact opposite thought of what they need to. They come in looking for the most riskiest, highest flying asset to kind of jump into without even knowing what they're doing. And those are the most riskiest, right? Those are the most difficult to trade.
Yeah.
So they come in inadvertently trying to do the thing that's the most difficult to do, rather than going, okay, I'm going to come in, I need to learn, I'm going to get into something that it's still volatile, but Bitcoin's still volatile, but it's nowhere near like, Pepe there, what was for a while, you know, another meme coins that jumped up just stupid, right? But people get drawn in on that, unfortunately, and that they kind of set themselves up to lose when they come in with that mindset, unfortunately.
Yeah, I mean, I totally agree with that. And I've been there. So everybody out there watching right now, it's not just you. I've bought a high and sold a low. I'm sure you've done it at some point too, Chris. Every single person. And that's why the systems are important, whether you get it in BitLab Academy, whether Chris does coaching as well and knows, basically works through all this. He's got a whole community. Jesse Olson, who we had on a few weeks ago. I don't think any one of us care at all whose community you join to learn. We just care most importantly that you do the number one thing I would recommend, which is be ambitiously curious. Go out there and there's plenty of free resources, much like this channel here. This is a free channel just to bring people like you to everybody out there and all of you in the community right now. Comment down below if you've ever learned anything on this channel. Comment down below as well if you've ever learned anything on Chris's channel. If you haven't yet seen him and watched anything he's done, definitely check it out. I got to twist your arm a little bit here, Chris. I got to ask you, you are absolute tech wizard, technical analysis wizard, and a chart smith. So can you break down a couple charts of what you're looking at? And I'll give you two sort of scenarios here. One, you've been away for 2 weeks, haven't looked at the charts at all. What's your process? I'm guessing it's not just Bitcoin. And even if you're Bitcoin focused, what's your process to get the lay of the land? And then the second question will be, what are you looking at in terms of, are you just looking at Bitcoin and Ethereum? Do you have your eyes on anything else? And I'm just going to let you kind of run with the charts for now and share some magic with the community.
Okay. Yeah. So, if I've been off a bit and I'm coming in, well, the first thing is, I tend to view everything in its own chart. I don't, there are some correlations that happen from time to time. But basically I tend to look at the charts on their own with what's going in on there. And so, but if I was to look at something, I would look at, say, the dollar or the DXY over here. And I'd want to know, okay, so what's going on with the DXY? Because generally speaking, if the DXY is rallying, if, this is the dollar weighted average here against, other pairs, the Euro USD, the USD yen, the USD CAD, in Great British Pound USD. And so, each of them has their own weight in this index. And so basically, if the dollar's rallying, that usually in the grand scheme of things means that it's risk off, right? Money is flowing into dollars and out of other things, other riskier assets. If in general the dollar, the DXY itself, is kind of coming down, then we generally expect, again, money is coming out of the dollar and going usually into risk assets. So, if we zip out here on this DXY chart, look at the weekly here, again, we had this big move down. And this is really sideways here, honestly, since January. Most of this year has been sideways. It makes a little bit lower down, but this is really sideways. But, we had this move down here. And so when we see that, we would expect then that, stocks and crypto and whatnot kind of go up. So, that might be the first thing I do is say, okay, where are we going on that? And as you can see right here, I mean, look at this weekly, absolutely just beautiful, potential reversal candidate. It's a pause, potential reversal. We're starting to get some follow through this week, likely topped up. So I'm kind of expecting this. I want to see some local breakdowns here, but really kind of expecting it to break down further. So, if I'm going to look at a chart, that's probably going to be it. But one thing I've also noticed is right now we've got extremes. People are really concerned about yields on bonds. People are really concerned about the dollar. People are really, they get to these extremes. So when you start seeing these things line up in the market, it's usually a good indication. Once you get used to this, you understand, when it's actually at these extremes, where you're marking a reversal. So, again, bonds have been going down, yields have been going up. So we can pop on over here to, let me see here. I've got TLT real quick here, which is bonds, 20-year plus maturity dates on them. Let me get this pulled up. And if we're looking at TLT here, well, let's kind of pull it down here. There we go. Again, zooming out here, we've got this big move down since COVID.
So this was the COVID. So where your mouse is right now, that's COVID, just to give everybody reference on the chart. So that's March 2020.
This is COVID here, right. And so where you saw during this same period with stocks, you saw stocks drop, right? You saw the indexes nosedive while this rallied up. And what has happened since then, of course, stocks have continued to rally and TLTs continued to drop here. Now, is it at the low? Could it go lower? I mean, I think there's a good opportunity here. We've got this bullish divergence since October of last year on the weekly here.
But I got to ask you, I got to ask you, one of the things I forget all the time, and I'm guessing you do too, because you're human like I am. And I was talking with Tim Warren about this the other day. We forget what we didn't know, what we didn't know before we knew it. So although we feel like we may be breaking this down, and some people might have heard, why the hell do I care about what this chart is doing with bonds when I'm trying to figure out what AVAX is going to do, or what Ethereum is going to do, or which direction Bitcoin is going? How does this relate to that context?
Well, if we're looking at it and we're looking at, everybody's talking about interest rates, and that's the key thing here, right? As long as interest rates are staying up, there's less likelihood there's going to be more cash injection. Liquidity is what goes into the markets and makes prices rally. It's when you got all this extra cash, what do you do with it, right? You put in riskier assets. So, if we think that we're getting a change here, then it looks like, again, we're talking about the Fed. The Fed's looking, they're suggesting maybe we'll have one more rate hike by the end of the year, and then that'll be it, or at least stay higher for longer. So, when we're looking at things like TLT, we're looking for that change because that can kind of give us an idea of what may be coming up in terms of interest rates. And then not only in interest rates, but also, the Fed's been on this tear to sell off, to drop its balance sheet here for quite a while now. We had the biggest reduction in M2 money supply in I think like in the history, or at least in like 60 or 80 years, quick. And it's been fast. And so, if you're looking for prices to go up, an easy way to do that is injecting liquidity. Now, it's not just the US, it's also global liquidity. What's China doing, whatnot. But when you're looking at charts like TLT, you're looking for that reversal. You're looking for that reversal to come in there and go, okay, well, now maybe interest rates are topped out. Maybe the Fed will pull them back down, which will get people interested in spending money and putting money out. because it affects everything, right? Your interest rates the Fed fund rate comes down, your mortgage rates start coming down. If you're into housing, we've got this gluttony of houses out there. Nobody's buying right now because the interest rates are so high. But man, oh man, if those interest rates start coming down for your mortgages, I think that has a chance to pop housing prices up higher, because then you're going to have people fighting over getting into those houses on those lower interest rates. And so I said a gluttony of houses. We have a limited supply is what we have out there, comparatively. And so, charts like TLT, charts like the DXY, these give you a broader understanding of what may be going into the market overall, which then affects what you're looking at. So especially if you're looking at altcoins, you definitely want people to be risk on. You want them to be putting money into the markets, and you want them to be feeling better about it and having more loose money to do it, because that means they're more likely to put it in the little shit coins, the crap that everybody wants to get rich overnight with. So yeah, on these charts like TLT, or like on these charts like the 10-year yield, on charts like the dollar, the DXY, you want to look, if you've been hurting, if the market's been hurting, people have been complaining for a while, you want to watch these for a reversal, because that's when the other thing happens, right? The thing that everybody is so sure is not going to happen now, because it's been doing what it's been doing for so long. That's how you start finding those bottoms, those reversals that you want to be in, and just kind of buy in and let it ride with it.
So in a way, you're saying you can somewhat use this, not like a leading indicator, but it gives you an indication in context, in some sort of almost leading fashion, that the context of the market is likely starting to change as well, whether it be interest rates or liquidity injections. All these things, they work together. So we don't need to just look specifically at a 10-minute chart of our favorite altcoin and know exactly what's going to happen.
Yeah. And, and I would argue, everybody comes in and they think they're going to day trade their way to riches. Well, first of all, without any understanding of how to day trade, or, like I said earlier, without the correct mindset. So that's already the barrier. For most people coming in, it should be this idea of, okay, where can we get in? Where can we start learning to find these more macro, these more longer term bottoms or tops for the reversals, especially the bottoms, because those are easy buys. Again, if you can figure out where that bottom may be, you get in there, your stop loss is pretty close to, pretty quickly whether that's going to be a bottom or not. And if it is, I mean, you've got tons of upside on it, and you don't have to try it all. You don't have to work at all for it, versus trying to day trade your way. And like you said, 10-minute charts, and it's a complete different mentality. For any of y'all listening, if you're gonna scalp, and scalping is usually like 2, 3 minute, 5-minute charts. It is a complete different approach to trading than if you're looking at, say, the hourly or the 4-hour, which is completely different than if you're looking at more the macro picture. You're talking about weeks or monthly charts. And you have to get that right, because if you come in to the scalping thinking, as you would normally look at for the longer term, the weekly, the monthly, you're going to lose all your money quick, fast, and in a hurry. So, again, it comes with this idea of understanding what don't I know? I think people just have to be honest with themselves. People don't want to admit that they don't know something. They don't want to admit they may be wrong. But if you're a trader, that's one of the best assets you can have, is to recognize, like you said, know yourself earlier. You said that, and recognize when you're being a certain way that's not conducive to you getting to where you want to get, because you can't change it unless you actually identify that it's happening.
That's such a good point. And it actually kind of ties back into what we were talking about earlier. It has to do with strategy and different people that do different things. I can share a strategy that I've used that is consistently a winning strategy to 100 people. And maybe depending on the person's diligence in learning that system, it's going to vary entirely. And it's not because the system is flawed. It's because the way people approach the emotionality or understanding themselves is entirely different. So it's such great points here. And these are great charts for anybody. We all get so myopically, zoomed in and like focused on this one asset we need to do well. Do you feel like you've, other than Bitcoin, and I would argue that it's not even also with Bitcoin, but Do you feel like you ever struggle with having an attachment to an asset or wanting to let something go because, or if you have in the past, how you deal with that? Because I think that's one of the biggest issues I see in the space. They want this asset to do good because maybe it's the first one they bought, or maybe they thought they knew, but they can't cut it free. So what do we do there?
Oh yeah, it's tough. It's tough. Again, we go right back to the idea of emotion and psychology, and it's really tough. I don't think people give it the honesty that they need to in just how tough it is, right? Because I'll get out here and I'll talk, and maybe you'll get out there and you talk, and we make it sound so easy sometimes, and not that we mean to, but just that we've learned to start identifying these things in ourselves when they come up, right? So I've been doing this 1995, so what? It's 27 years, something like that. Jesus, a quarter of a freaking century. Okay, anyway, um, but it's still today. I can still find myself, maybe holding on to something I shouldn't for a bit longer than I should, even though I know better, even though I've been through it, millions of times in the past. But again, it all comes back to being, being just human beings. Innately, we are emotional. We're creatures of habit, things like that. And so what happens is you have to have some sort of reminder to check yourself. But even if you have that reminder, if you're not used to being honest with yourself, not just in trading, but in anywhere in life, because what you do in trading is the same thing that you'll do everywhere else in your life, whether it's work or business or, romantic relationships and stuff like that. So you have to start repeating, you have to start getting used to being honest with yourself. And you have to accept that it's okay if you're wrong. The important thing is to understand that you're wrong as quick as possible, so that way you can do what you need to do to change that. There is no quick, easy fix. You'll never, these things about emotion and don't get tied and all these things. I mean, it never goes away. Every trader will tell you it's still there. And if you have something going on in your life, something really good or really bad, near the time you're trading, it's still going to affect you. You're not a robot. You do this for 30 years. You're still not a robot. You're still going to have to pay attention to those things. So I think it definitely starts off with being honest with yourself, is the first thing, and practicing, doing these things and practicing calling yourself out and saying, okay, am I being realistic here? And one way you can do this as a trader is a trading journal. Put in a trading journal, proper trading journal. You're going to have your entry, exit. You're going to have your entry, your exit, and your stop loss. You're going to have the time when you pulled the trade, what you bought, how much of it you bought, how much you had, whatever.
How'd you feel?
That is exactly what I'm about to say. Yeah, you have to put in how you're feeling at the time. Also, I'm a big proponent of saying over the last 3 to 5 days, has anything more significantly emotional happened? Did you have a fight with your loved one? Your kids stressing you out? Is your boss, you ready to bury him 6 feet under? Put this stuff down there, because what's going to happen is when you're out of the situation and you look back on it, what you're going to notice is when you have consistent losses, it's going to be emotionally based. It's going to be that you didn't recognize that was what was going on. And
you
it caused,
chart,
you
can
caused
chart
you to
your
take the bad
trend.
trades.
You can chart your trend over time. Yeah.
And once you see it, then you can fix it. You can address it and you can fix it. But until you actually know that it's happening, until you're honest with yourself about it happening, you have no chance of fixing. You're going to keep repeating that same thing over.
Chris, you've been sharing so many great tools here. And I want to say how much I appreciate having you on. Before we go, we are coming up on time here. I know it's Saturday morning or Saturday evening, depending on where people are watching from. And I want them to get outside, hug a tree, stare at the blue sky. And if it's not blue sky, let the rain hit your skin, pet a puppy, get out of, you've done your job today. Everybody watching, you've done your diligence and getting some education and tuning in here. Before we let them go, would you be willing to share, somebody sits down at the trading desk, say you could look at Bitcoin or Cardano, or it doesn't matter what asset you pull up. What most basic strategy, maybe 3-4 point strategy, what are the 4 things you're looking at to determine if a trade is available? Like, are you looking at volume, RSI, stochastics? Are you looking at the moon phases? What's a basic strategy to jumpstart people and help retune them towards the winning path?
All right. Well, I'm a big price action volume trader at the end of it. That's what it is. That's nothing you learn overnight, though. It does have a lot of intricacies. I would say if you're a new trader, If you're using TradingView, if you go up to the indicators and you type in pivot points and you pull in the standard, that's this R1, P, S1, S2. I think that's one of the easiest, greatest things for traders to use, especially starting out, because it lets you know where your support and resistance is historically coming into where you are. And so if you always look left, you'll learn to look left if you stay in the market long enough, and you'll see these things start to show where you have all this consistent resistance and support. And that's all the pivots are doing. So, I would use pivots. If you get an impulsive breakout above one, you've got a chance of going to the next one. If you get an impulsive breakout, and what I mean by impulsive is you'll have like a larger candle spread compared to other candles locally, and you'll have a spike of volume with it. So, if you're getting an impulsive breakout above, the pivot, for instance, you would be looking toward the R1 pivot. If you got an impulsive breakdown through the pivot, you'd be looking at the S1 pivot. That's probably one of the easiest things you can do. The other thing you can do is this volume by price level, which is the volume that I have on the side of my screens. And where they pull back, where they don't come out, where they pull back closer to where the numbers are on your chart here, the price levels, those are called low volume nodes. And generally what you'll have is price will hit them and reject, or, coming down or reject, hitting, reject, at least the first 1 or 2 times, 3 times before it breaks through. So if you see price rallying up toward or dropping down toward a low volume node, usually nothing's 100%, but more times than not, it's going to find support or resistance there. And it'll take 2 or 3 times before it pops through, because the market's just not interested at that level. It's telling you at that price level, there's very little market interest. So if you're going to force price through that level, you're chasing price. So you're going to have to pay higher prices or get lower prices if it's going down. And so big players don't do that. They let the market push through areas like that. So you'll usually see those rejections, supports right in those areas. They're probably the 2 biggest easiest things to look at.
I know. I think that's great, because volume is one of those things that's so underutilized. And the interesting thing about volume is people think it is one data metric. And in reality, just on your chart alone, and you have your chart set up similar to the way I have mine. I have the volume across the bottom. That's one volume metric per bar, what the volume is. But then you have, the VRVP, or we have the BitLab volume on our BitLab trading stack, which is essentially a volume profile at each price level. Then you also have, there's probably 17 different, then you have the volume weighted average price. And there's so many different tools for volume. And why does volume matter? Because it's showing you a metric of how interested people are at certain levels. That's what better data could you want, right? So definitely a good point there. Chris, is there any last things you wanted to say before you wrapped out, or anything you have coming up, or any special links people can find you out other than your Twitter?
We just moved to a new platform. We used to be on Discord. Now you can get us over there at members.texaswestcapital.com. We'd love to have you in there. We've got different ways of getting involved, but like you said earlier, we run a business. Yeah, we'd love for people to come, join us and learn how to trade Elliott Wave or Wyckoff or price action. But the real key at the end of the day is that they learn. I've been doing this a long time. I've talked to thousands and thousands of traders. And I wish every one of them success. I know that very few will actually do the things they have to do, because it's work. It takes effort, it takes discipline, it takes focus. But man, those that actually do put in that, what that requisite there, you hear about them and you hear how their lives have changed, and they start enjoying the markets like I do, like you do, right? And it's a whole different way of looking at life when you do that. So, again, whether it's with us, whether it's with you, whether it's with somebody else, learn what you're doing. Be serious about it. Take it seriously, because that's the only way you're going to make it in here. But if you do, man, I promise you that just the lifestyle, the way you look at life just becomes so much better when you don't have to worry so much about bills, right? And that's what you're trying to get to.
I couldn't have said that better myself. And any of you out there wondering where you're at on your trading journey, I can tell you firsthand, and I'm sure Chris would agree with this. If you're frustrated by price going down on any asset, then you haven't made it trading yet, because traders welcome up or down. Now, Key and I are frustrated with the price going down because it drives down engagement on all these media platforms where we want to talk with you all. But in terms of a trader and an investor, I look at price going down as an opportunity, because I've done the analysis on the assets I'm investing in. So I don't mind buying at cheaper prices. And I find that when I am frustrated with price going down, it's because I'm out of position and I'm frustrated that I didn't have a better strategy. Chris, thank you so much for being here. I'm going to go ahead and wrap it out with everybody. Everybody right here, you can give him a follow at TX West Capital. You can also find his information right here on his site. He's from Houston, Texas, where I'm originally from. So we're going to maybe have to link up next time I come out there. Make sure you give me a follow right here at Kelly Kellam, Kelly Kellam. And then, of course, BitLab Academy at BitLab Academy. Or sorry, at Academy BitLab, I should say. My apologies. If you haven't yet, check out bitlabacademy.com. We got all the tools you need. If you're watching anywhere else, because this is clipped in various places, check out youtube.com/at BitLab Academy. Come and join us in the family. I love each and every one of you. Thank you for being here. Thank you for being a valuable part of the community. Each and every one of you that does better in the space makes the entire space more likely to have mass adoption, because if you kill your portfolio and you lose all your money, you become a negative drain on the space, because everybody around you then thinks there's something wrong with this asset class. If you win, or if you just slowly, even if you're a slow player, you're DCAing in, you're being patient, and you have capital appreciation, you have your portfolio grow in value over time, those people in your life around you are going to be wondering, hey man, what's going on? How'd you get that new house? How'd you get that new car? You become one of the best missionaries for this space possible, and your life is better because you have more access to capital to help people and to help your loved ones. So big love to everybody. Hope you all have a wonderful day, and we will see you in the next video. Adios. Adios, muchachos.